Alright, welcome back everyone. It's been a long time we did an interview here in person. Today I'm sitting down in Singapore with Alejandro, one of my colleagues and one I've been working with for the past couple of years now. It's been, 6 years or something of the sort. Alejandro is my algo coder, coding all my algos, working on stuff to develop better strategies, trading better, and also a coach at Desert Trade. So what's up? Welcome back.
Hi Etienne, it's been a long time. It's been 3 years since the last interview in Hong Kong, so yeah, it's...
We see each other every week on videos, we do calls, we work hard on stuff, but we never kind of met up in person since COVID happened. So good to connect with you again. Good to see you in Singapore. It's a beautiful day so.
Of rain, but it's been pretty nice. Earlier it was pretty nice sun.
Anyway, it's a really good area here to chill and to stay. You're staying here, so that's good. So yeah, let's talk a few things. Let's give people some tips about how to trade algos, how to kind of maintain and develop a traveling trader lifestyle. You've been traveling now. I'm traveling also. Michael, who's in our team, also is traveling. We're all traveling traders. We really like that stuff. We like to be able to kind of make money anywhere we are in the world, and that's something that we kind of care about. So tell me a bit more about kind of what you're doing these days and what you're working on.
These days I have been working more on like maintenance of the algos. So I have been working out on backtest. From the backend and some of our members that we're working for a new process of optimization, somehow algos for this year, so we can have more stable and reliable results. That's on the Desire to Trade side and the more public side. On the other side, I'm also working with some lawyers and team to work with a fund, with the algos, so help them with algos and manage the money via the algos. So that's other thing. So those things have been taking a lot of time. But now that the place I live in, Macau, has reopened the borders a bit more with China loosening things, we can go back to traveling. And that's why I have been working on these past months on the algo side, on making them more self-reliant, so that I can enjoy again the traveling part of the traveling trader. And we have these situations like this in which Etienne, Mike, and I were on the road, and we kind of didn't really plan it. We were just planning each one our own stuff, and then suddenly it was like, oh yeah, I'm traveling next week, and then traveling next week, and yeah, we coincided in this place. So yeah, it's pretty good.
It's actually funny, last week you told me you're going to Singapore. I was planning to go to, I believe, Malaysia or something, and I said, oh, I'll just go to Singapore. No worries, let's meet up instead. It's better. Yeah. So yeah, it's a change of plan last minute like this, and it's always good to be able to have the flexibility to do that. Like, you don't have to be in a certain place, certain time. You can just change your plans, do something you like depending on how you feel sometimes, which is good. Tell me though, so algos take a lot of work in terms of you got to be at your computer to kind of set it up, do some backtests. I know you backtest a lot of stuff. You're always trying to make things better and like improve them a lot. How flexible is that? Can you like travel with it? Are you able to still do it like in the background while you still do things, travel and go outside? Or is it something very intensive for a few weeks and you kind of travel after and kind of have some free time after that?
Yeah, it depends on what type of algo thing you are trying to run. So if you are trying to run a algo in which you are coding everything, preparing everything, and testing, so that will be a lot more intensive, because depending on your experience, maybe you are experienced already in coding or not, you may need to learn a lot of things. So it's like starting a new endeavor. You will have to work a lot to get to the point in which it runs by itself, the algo side. And then if you're doing everything by yourself without any help, you will have to do the testing and testing, tweaking, and all those changes, which can take years. From our experience in How to Trade, when we started working together, we were working with algos, and we had to go through a process of tweaking, changing some things. You test some things, they don't work, and that's really frustrating. Sometimes you work a lot, like for a couple of weeks, and then you get nothing. But sometimes you work a lot for a couple of weeks, and then you get really good things that you can let them running. And just recently I have been, for my algo portfolio side, just logging into my VPS once a week, just to check if everything is running, everything is good, and then just letting the algos run and letting the algos take the trades, make profits, and all those things. So it's a mix of things in that sense, and it allows you to eventually get to a point in which you don't really have to do anything for them to work.
What would you tell a beginner that wants to code their algo to get some more freedom? Should they kind of code it themselves? Should they learn the whole coding aspect? Which I'm sure you did, like when we met a few years back, you didn't really know coding too much. And you kind of learn it through over time to get pretty good at it now. I know you code TradingView, you code different things, and R74 and close to MT5 now. Or is it better to just like get a coder and kind of handle this off to someone else, in your opinion?
It depends. So one thing that I have noticed is that when people get coders, sometimes they just think that they just need this coded or this and these rules coded. So they may not understand properly the strategy that they are wanting to get code. That's something that has happened a lot with clients in the past for custom coding. That's why I stopped doing custom coding and I was custom coding plus coaching, because I had to get them through the process of, okay, we need to understand your strategy first fully so we can get it coded. So many people, when they are getting someone like, like Upwork or some platform that got to get a coder, the coder in those platforms will just do what you tell them. So you tell them, I want this to take a bite when this EMA crosses. They will just do that and nothing else. So if you don't understand your strategy well and you're not able to express all the rules of your strategy and lay them out for the coder, you may end up with something that half works or doesn't really work. And that's usually what people had bad experiences with coders. So because they couldn't express properly, or the coder just did exactly what it was told and nothing else. So that's one of the things in there that pushes people to trying to learn. But learning is really complicated unless you already have some experience in coding and you want to do all the things by yourself, which some people want. So the ideal is that if you don't really want to get into coding, but you understand your strategy and you want to get it coded, then you get an experienced coder, experienced team of people that have a track record of not just doing exactly what they are told, but also suggesting you things. For example, one common thing that we have with our clients for custom coding is that they may have some simple stop loss rules or take profit rules, and with our experience in trading, we tell them, hey, this, from what you're explaining your strategy and the logic, market logic behind it, maybe this type of exit could be a good thing for you to include in there. So we are helping them to improve their idea in the algo sense, even if they already have a full idea in terms of the strategy, we're improving it into the execution of an algo.
Kind of the thing about learning, like what can be coded and what cannot be coded in terms of algos. Like there's some strategies that are really hard to code, other things you can code very easily, and other things that you might not have to, or you might have to do like a bit of both, like some manual, some coded. Give us some examples of how that works out. Like what can be coded easily, what cannot be coded easily.
Yeah, that's right. I was forgetting about that part. Yeah, there are some parts that can be coded, but they may either take too much time or may not be worth it. And of course, if something is taking time for the programmer, then they're going to bill you for that eventually. So maybe too expensive. Maybe it's possible, but you need a bigger budget, like a hedge fund type budget, then you're able to do code almost everything there. But the main characteristic is things that rely more on price action qualities, things that are more discretionary in nature in terms of the process to get to there, they are harder to code. In part because we as traders sometimes cannot articulate what the definitions of the different parts are, and sometimes just because getting it to code into a level in which are comfortable may take a pretty long time, a couple of years of experimentation, but doing it yourself in a hybrid way with the algo may take you 5 seconds a week, 5 seconds per chart once a week. For what that's, I'm just going with example of the BBR strategy, which we originally coded. Coding support and resistance areas, it's a concrete example of something that is hard to code because it's pretty variable. Many people have different definitions, different sizes, variabilities, and apply sometimes to the market context or to the strategy itself. So all of those small nuances, small changes are pretty hard to integrate into coding. And for a human that is well trained, for example, for Etienne, he can look at the charts. If you go back to probably 5 years into the videos when he did his weekly reviews, he will look at the charts, and in 15 minutes of work in a week, he will be able to get his zones for the whole week, and sometimes they will last for even longer for all the pairs he was looking at. So it will be a lot easier, more effective at the beginning in your algo, for example, to make the algo able to get the values from your own inputs and just use the zones that you are telling it, instead of going through the process, which took us about like 2 years to, after we had that, to get a much better improved automatic support and resistance area system.
I want to talk about something specific, which is that your algo should should never be perfect. It's impossible to make an algo from day one perfect. All the right zones, all the right things to look at, all the right rules. There's always going to be things coming up that you have to deal with, or kind of things you make better over time. I think people stay stuck in the mindset of like they want to create something perfect from the start that will take all the right trades, be profitable right away. While there's a lot more that comes with it over time that kind of develop over the years.
Yeah, that's true. Many people think that if you are algo trading, you will basically have a perfect system that never makes mistakes, or you never has drawdowns and things like that. So algo trading is not necessarily the magic pill to never have drawdowns to never have any losses. It's a way to automate the strategies, automate the execution of the strategies, and by automating that, you can also automate the testing and get more reliable information. But that's also something that people end up trying to do a lot, which is, oh, I have a, let's say, relatively simple strategy, and then they start putting too many filters, or they see like, oh, it had, like say back tested in 3 years ago, it had 3 months of drawdown. And then they start making things or changes to the parameters, changing to the inputs, adding more things, just to eliminate that. And they end up with something which will not work in the real world going forward, because all they did was make something that perfectly works in that previous history data they are trying to make it look good on, and then it doesn't really work anymore. So that's something that happens a lot for people, and sometimes they don't even realize they are doing it because they just think, like algo should always be trading good and there shouldn't be any drawdowns, or like 2 months, 3 months of drawdowns are never going to happen in your algo trading. So it's like with manual trading. It's a trading strategy, it's a trading system, it has ups and downs. You have the benefit of not having to be there to be able to execute the trades.
You gotta think about some of the misunderstandings of algo as well. Like I want to hear about the mindset. People say, oh, well, if you have an algo, you don't have to deal with the mindset. It's like all automated, just let it run, and then you make profits, and then you're good to go. You don't have any anxiety, any emotions. How does that reflect with algo, in your opinion?
Yeah, that's an interesting thing. I think at the beginning, when I entered my algo journey, I was thinking something similar, that algos will stop me making trading mistakes from emotions or from like not being in the right state of mind, like that, which is pretty common for manual traders. But when I started trading algos, I found myself doing some of the same things, which instead of, for example, for a price action trader, taking impulsive trades or closing the trades too early, it would be the algo takes a trade, and then you're looking at it and it's like, why did you take a trade? I don't agree with it, and I close it. Or I will close it early because I'm looking at the price action with something irrelevant to the algo strategy. And it will be like, okay, I think should close it here because I don't think it will go to the take profit, and it may go to the stop loss faster, right? So just basically putting my own bias into the trade the algo already took and close it. And if I haven't done anything, I will have made more profit and it will have let the algo run. So that's something that I have seen happen personally and also with most people. Algo trading does not eliminate your trading problems in terms of trading mindset. It makes it easier over time because you are not looking at the screen all the time, but you will still need to be mindful in the sense of, if the algo has its trades and you trust the backtest, you trust the process, then you should just let it go. With algo trading, it's a lot more about just letting it play, letting it execute, letting its edge play out, and just monitoring that the technology behind it are working. If you have EPS, that the EPS is running well, the MT4, MT5, or other platform are taking trades and there are no errors. It's a different type of management process, which for people that are used to day trading or price action trading, it feels like you are doing nothing, because most of the time you don't have to do anything unless there are errors, and they don't happen that commonly in algo trading.
At the same time, we've had some settings for the algo we thought would work pretty well, and then they start to kind of just lose money right away when you use them for some reason. So knowing when to cut some things also is a key aspect. And you cannot just be emotional whenever you cut the algo. Like you don't want to like change your settings every week because you feel it's gonna be better, or you don't want to like close the algo or turn it off because it's gonna be better in that situation and stuff. So kind of knowing when to do it properly based on data is a really good skill to have.
Yeah, in terms of that, I have a pretty simple rule simplified rule for my algo management. Is I do my back test, I trust the process. I have learned and investigated a lot on how to do the process statistics behind it and the process to get to the results. And then I get my numbers, like maximum drawdown, mostly risk-related numbers, and those are my thresholds. If they are broken, then there is a warning. If they are exceeded by a certain level, then it's completely okay, stop it and take it away and then reanalyze and things like that. That makes it a lot easier instead of having some guesswork, because many people will get an algo or with any strategy, and then they have a drawdown. Like say they trade it for 3 months, the first month is good, the second month has a drawdown, the third month is recovering but not fast enough, and then they just switch it for some other strategy that they just seen that in the past 3 months are making more money than the other one. So they may leave one algo or one strategy when the drawdown happens, but the other one had been going well, and then the other one may have now the natural drawdown in the strategy. So if you know your numbers in algo testing, in algo is the back test, what shows you the numbers. If you know your numbers, then you are able to withstand those more in terms of have less emotions when those happens and understand that those are part of the normal course of, like ups and downs of the strategy, and able to actually profit from them instead of just keep hopping from algo to algo.
Good point, good point. So you can artificially by yourself increase your drawdown with different things that would usually make a drawdown smaller, but you can increase it yourself by doing these stupid things, which is a good point.
Yeah, and
very good point.
I always have my personal rule is whenever I put an algo, I know I want to have a drawdown, because I don't know if it's timing or just luck. Every single time I have made major changes to my portfolios, I put the change and then it may go like 1 month in drawdown or 2 months in drawdown. And then right after that, like kind of like testing you, if you are really sure about your stuff, then it goes and makes a profit. So that happened to me in 2021. I put the portfolio, it went into drawdown. We checked it. It was normal drawdown, nothing exceeded. We just let it run. The third month, it recovered all the previous drawdown and made basically double than what it had done in drawdown, and then continued as expected in the equity curve. It's just, it's never nice to lose money, but if you know the process, you know you're going to get it back and then some.
Yeah, patience, for sure. We can talk about risk management later also, but the other thing I hear people talk about, especially on YouTube when I talk about algos and the fact that I use one and I coded one, we coded one sort of, is people say, oh, algo are scams. They're just like, they won't work. They're just there to kind of get people rich, but they won't work, or they're just scams. I guess that's a really very like uneducated guess. People not really using algos or seeing these like over-optimized algos online. Also, people think that what will make you having a better algo than the funds who spend like millions of dollars working in the algos? How can you compete with them if you're just at home coding a small algo? How can you be better and still make money yourself?
Yeah, that's something that I have heard a lot in the vision. Like, there are scams, there are companies having millions of dollars put into that. And I would say it's pretty much like normal other trading educators or trading coaches. There is a lot wide variety. So there are many people that are having scummy practices to sell or to show their algos and things like that. You have a lot of scam algos there, which go through the process I explained before. You just keep changing the things until you have a really good backtest, but they're never going to have any good thing. Or some even that cheat the thing, in which they basically make the algo a black box that you cannot see anything about it, but they just take the trades that are good in the backtest, but they never work in life for the future. So there are many of those in the market, but there are also people that are making their own strategies that are already trading, and they just want to have a side income, and they're selling the algos in either the marketplace or in their own website, and those can work. The problem for many people is that if you don't understand a strategy and what the algo is doing, you will not really have the trust to keep it there. And if you don't have the trust, it's hard to know if you have a algo which was just advertised and it's more of those ones that don't really work long term, or if it's a reputable algo that's going to work long term. You just have to follow the process. So that's the hard part on the internet. For most people, I recommend if you have a strategy that you know and you want to automate, that will be the easier route for you to be confident about your algo, because that's your own strategy, similar to what Etienne did with BBR when we first started working together, which is you get your own strategy, you code it into algo. It can be simple strategy, it can be simple premise, it can be more complex. But the core is that you understand what the strategy is, and once you have the algo, you will understand also what it's doing. So you know what's normal, what's not normal, and then you can let it run and pass through those drawdowns that we talked about earlier, and be able to get to those good times with the algo, instead of just getting something, not really knowing if it should be in a drawdown or it shouldn't, what's normal, what's not normal, and then just dropping it when it has the first drawdown, and basically entering in that cycle of you're just getting the drawdown side of multiple algos instead of enjoying the benefits of them.
I think the two pitfalls of algos are, one, not understanding properly the strategy, like the logic behind the algo and the trades it takes, and then you always want to play with it. And two would be like, or not experimenting enough the technology behind it, like the platforms, the things you got to do, the VPS sometimes, not being willing to learn these things, or hoping that these things will like show up by themselves for some reason. Not being able to practice technology enough to use an algo correctly in the correct form.
Yeah, I think that's a big, that's one barrier for some people that are really not really that technologically adept, is that maybe they are unable to understand, or they take a long time to understand the things. But I think that it's possible to have someone else help you and guide you through it, but I think the ideal is for you to be able to do those things, because long term, you don't want to be dependent on any single person to be able to run the algos. Even if you bought the algo from someone and you're running it and it's working for you, you don't want to be dependent on them for the future, because what happens if they close shop or they have an accident and they can no longer support the business, and the algo is still working well for you and it's still running, but you do not know how to continue making it run, or the DPS or anything has any problem, you do not know how to work with that. That can be a problem. So I always think of, this comes from Michael Thomas always, like your business risk management in that size, that you should be able to, maybe not immediately, but over time, to be able to do those things by yourself, so that if anything happens to people that are supporting you, you are able to get things done while you get another support team in there.
Speaking of which, let's talk about risk management. I've seen people take the algo that we've built and start to trade on all the pairs, all the things possible, hoping to get many trades and get rich from it. And that usually doesn't work out too well. It's people who usually lose money they usually trade demo but still lose money on their account. So how do you manage the risk with the algo? How do you make sure you're not going to blow up your account with it, or have too much risk into one asset?
Yeah, so one of the things that I do is I always do back tests of my algo, my strategy. Why? Because the specific settings you're using, or the specific strategy and algos you're using, will have different characteristics. I'm talking about the equity curve. They will have different drawdowns, different markets in which they work well, and others that they don't. So if I make the back test of, let's say, Euro USD, USD CAD, GBP, Japanese yen, and just a group of pairs, it can be any random pairs, or it can be the majors, and I get the characteristics of them, I can then put them all together and see, okay, GBP, Japanese yen, and USD, Japanese yen, they basically have equity curves that go down and up more or less together. They're not exactly the same, but they more or less go together. So if I am taking 2 trades of that, I'm basically doubling my risk. And then you can either decrease the risk across the core portfolio, so that instead of using, just as an example, 1% per trade, you're using 0.5% per trade, so that the risk's more or less contained. Or alternatively, it's that you include in your algos some logic in which they are able to check how much open risk they have from other trades, and limit it to, let's say, again with example for the BBR, let's say we have it in all the majors and all the major crosses, so that's around 15 to 20 pairs. You could potentially have up to 15 to 20 trades at the same time if you have 1% risk per trade, and everything went to stop loss, you will lose up 20% of the account at the same time, right? So, it's extremely unlikely, but you can still have 3 to 5 trades open at the same time, and that's still a big hit. So what you can do is put the maximum rule, let's say maximum 3%. That way, maybe the first one that gets a trade will open a trade, the second one will open a trade, the third one will open a trade, but the fourth one will not open any trades because it's already exceeding the risk. So you can have a global maximum risk per trade limit, which is pretty similar to what would you do if you are trading manually, which would be okay, I have already 3 trades open. If I open a new one, I either have to reduce other things, or I don't take any more trades because I will be exceeding my risk.
One issue we've had a lot with people using the algo in the past is finding the right settings. And that's something that we talk about every single week. We discuss it. We go through how we can make this more simple for them, how we can help them in the process. But how do you actually go and build a portfolio with different pairs, different settings? Because the settings won't be always the same for different pairs. Different pairs have different characteristics. Some trend better, some are more sideways, some are more volatile, some are less volatile. So we kind of have to tweak it a little bit for the different pairs. How do you find these settings, and how do you kind of go through that process?
Yeah, so what I do is I do a multi-step optimization process. For everyone in Algo Nation, they probably know about that because I talk about that in the mastermind call we had about optimization in there. And what I do is I take and break down my backtest in multiple periods. And let's just go really basic. We can't talk about these backtesting specifics much, so to not confuse everyone, I'll go back to the most basics. So you get good data, you can use reliably, and then you put it in your backtest. So the main idea is that you want to have a part of the information or the data you have that your algo is being working on or being optimized on. That way, you may be fitting the trades to the price action at that time, because you want to get something that works well. But since you don't want to get something that only works well in the backtest, like we explained before, and you want something that works well in real life, that's why you separate some part of your information that it's never seen by the algo before as validation. So ideally what you will have is a optimization process in which you are looking for the results that improve your parameter. In our case, we like return over drawdown, so something that qualifies how much profit you are getting for how much drawdown you are getting over time. I personally use KGAR over average drawdown, but there are other more simpler ones that you can get, such as return over maximum drawdown or KGAR over maximum drawdown, which is easy to calculate. And I just try to find the settings that are highest. You can use the automatic optimization process, or you can do manually, and just get your result. And then after that, I test it with the last 30%, more or less 40% of the data. And I want to see similar characteristics. It doesn't have to be perfect, doesn't have to be the same or super good backtest results in terms of profits. You just have to be looking similar at equity curve, similar stats for the last part. So let's say we're doing this in process in a 10-year period. I will take about 6 to 7 years of the data and do the optimization process in that, trying to get the best results on that. And then you will have the last, 3 to 4 years of the data as your validation. And if it fails at validation, that means that you probably got over-optimized results. They're probably not going to be working in life. So now the multi-step backtest or multi-step optimization, it's exactly the same, but instead of having chunks like this, you just repeat this process in smaller blocks, like maybe 3 years of optimization and then 1 year of out of sample validation. And then you just do that and keep moving 1 year blocks. That way you get multiple of them, and then you get a optimization process that is more robust. So that's usually how I go through the process, and that's how you can get the optimized settings for each one of the individual strategies or of the individual symbols in your portfolio. Now, once you get the portfolio, we can make this available for free. We have a template that you can put all of the, basically you grab all of your reports and you get all the trades and you just sum them all there, put them all there, and then you sort them. But yeah, so there are some tools that exist out there. There are some paid, there are some free. But we made a new one for our members, and we'll be linking it below in the description for this video.
Actually, yeah, we'll link that one below the video. One issue we had a lot with the reports is, sometimes you go through like a backtest and then you get some data from your backtest, but then it's just not complete enough. You get some good data for sure, but you kind of see the graph on a daily basis, like the P&L day by day. There's a lot of stuff missing there, so we kind of made our own template on Google Sheet, which you made, which was also really helpful. And I think that's better to kind of look at things in that perspective. So that is going to be linked below. You can check it out. Definitely some good tools there to kind of get started with that.
Yeah, and you can use that spreadsheet for your own manual backtest and just add them there. Or you can also get the algo backtest, put them there together, and you put two different symbols, then you're kind of already making a portfolio and seeing how they interact with each other in terms of P&L.
That's a good point. Now, other thing I want to ask you is, what is the cutoff point where some people are very quick to cut something that doesn't work out, something that loses money in their account? They might see it after 1 month, losing money, cut it out, don't trade this anymore. What's the cutoff there? Because you got to allow for some room for the drawdown, things to go back, maybe a slightly bigger than normal drawdown to happen, because that's possible. Whenever you back this, you never get the full picture. So how much room do you leave your algos to lose money?
That's a pretty good question, because it all depends on how much risk you're willing to take. Some people are able to have maybe maximum drawdown in their account of 10%, some 20%, some are able to get 30 up to 50. So having a fixed cutoff point for everyone doesn't really work. So it has to be with your risk limits. But what I do is, so I get my backtest, again, everything is based on the backtest. I get my backtest and I get the information from there, and I look at the risk limits. So maximum drawdown, average drawdown. So the information that tells me about how much risk usually my strategy has. And from there, I will model it to get my desired maximum drawdown. So I will always backtest at 1% risk per trade, because that way everything is equivalent, everything is single, and I can easily multiply and divide by any number and get a value. So let's say that my strategy in my backtest at 1% risk per trade has a 10% maximum drawdown over the past 5 years. So what I will do is, so my personal maximum drawdown tolerance would be a 15% in my account. So that will be the point. Okay, so if I have a 1% per risk per trade, that should be fine, right, going forward. But what I do is, let's say that I wanted to get to that 15%, I will multiply by 1.5. That way it's close to the 15%, and it's within my tolerance, but it's like getting more profit potentially. So that's like the risk modeling part. Is super simple. You just model based on the risk. I don't really care about the profits part. It's already taken care in my calculation of the profit over drawdown statistics, which I use to evaluate my algos. So I only care about the risk in this part. And that's what I do basically in simple terms. But one really important thing to do is we always assume that the backtest is better than the future, because that's the information that the algo has been able to work more with. So what I do is I take whatever is my drawdown from the backtest and actually multiply it by 2. You can go a lot more in depth and have some ratios and calculate some things. But in my experience, I always get ratios between 1.5 to 3. So I have simplified it to my rule of thumb is if I get 10% drawdown in my backtest, that means a 20% drawdown in real life. And that 20% drawdown in real life is the number I use for my modeling. So what I would do is divide my 15% maximum drawdown, desired maximum drawdown in my account by the 20%, and then I will get my ratio. Okay, I will have to multiply or divide my risk per trade by that amount. So in the example that I just did, it will have to be a 0.75% risk per trade if my original backtest had a 10% maximum drawdown, then multiply by 2 my supposed worst case scenario for the future, and then my desired maximum drawdown is around 15%, so I will have to be trading around 0.75% that way. So that's basically the really simple rule of thumb that I follow to get quick results. Of course, if you want to go much more in depth, you can go and do many statistical analyses to get there. But yeah, as I mentioned, I got numbers close to that, so I just simplify the process and still get the results.
That's the thing about trading is there's so many kind of like quick answers, quick hacks, quick common sayings that people hear about trading that sometimes are not that true, and you can try to kind of work around. Like you mentioned, the 1% per trade, something people hear all the time. Just with 1% per trade, you'll be fine. But there's other parameters to it, other things you got to think about. Sometimes that can be good, that can work out. But sometimes you got to do a bit more work than that, kind of tweak it better. So I recommend people do the research. There's many sayings in the past that I've heard that I do different now. I do the opposite, and it works better. So
yeah, that's true. And whenever I say a rule of thumb, it's based on my experience. That's what has worked for me, or that's what I have found with my own strategies and my own algos. But I do know that there are people that are different things. Or as I mentioned, you can go to statistics and get your own values for your own algos based on either experience, or you do backtest by chunks. That way you can simulate like backtest, live environment, and things like that. And then you can compare the results and get your own numbers. So the rule of thumbs that we give for people, it's a way to try to simplify things for others based on our experience. But yeah, as Etienne mentioned, not all of them are reliable, so always take them with a grain of salt. And one thing that I take a lot from Algo is always test whatever you hear. That's something that also Algo allows you to do a lot. It's just, you have an idea, you can test it. If it works out, cool. If it doesn't work out, okay, you test it, doesn't work out, move to the next thing. So that's also part of the process.
Interesting. So one thing that's amazing about you is that it's probably a good thing, but it's also maybe a slightly bad thing, is that you like to work on a lot of stuff. You cannot just work on one thing. You've got the algos, you've got the funds, you coach for the stock trade, you do so many things on the side. And I think that's a good thing sometimes in your case, because you can achieve a lot of different things. I'm curious to hear what's coming up for you. What's needing to work on? What's your goal with the algos now that these are up and that you can use them? What comes next from there?
Yeah. So that's a good thing, is that I sometimes do a lot of things, but sometimes it's not because I am looking to a lot of things. Sometimes just things happen. With the algo things, developments, we had some ideas. As I mentioned, we just tested them and experimented and it worked out, and we just built something up on there. With the fund, it kind of I had a contact, they told me they were interested in something, we continued there exploring it, and it just kind of happened again. So things like that's they are very interesting things, so I keep pursuing them, but it's not like I'm actively trying to do a lot of things. It's more like they just happen and I pursue them, and they're interesting things and fulfilling in that sense. But for me right now, for the next couple of years, it's the fund is pretty big, working with the funds in terms of with the algo part, with the fund, that's some pretty big thing. But in the coaching side, I have gotten a lot of personal satisfaction by seeing the members and helping them grow, helping them in their own endeavors. I have getting a bit more specialized in Algo, but we also have a bigger community in Algo now. And I always enjoy seeing how people get from a point in which they are not really that comfortable with something, or they don't really know it, and they get in a point in which like they're able to pass proper challenges, so they're able to be comfortable with their own trading, with their algo or manual trading. So I think that in the personal side, I will be like the focus on the coaching and the consulting aspect will be bigger. On the professional side, well, the fund, it's a big opportunity, so that will be the what's coming next, focus on that side.
Good point, good point. I know, yeah, you've got a lot of good work with people, and having them using the algo, you've been able to help people who are not so much like tech people, kind of being able to use these algos correctly. So that's been a very good change, something very useful also. And people have been able to also kind of overcome these aspects of being in a drawdown to being profitable with the algos, which you help, or even in the manual trading also, by using the things you teach them, which is very cool, very cool. So if you're someone who wants to add some income to your own trading already, maybe you trade profitably now, maybe it's not working too well so far, we'll leave you the algos that Anlo and I are working on, the things that we trade ourselves. We trade them every single day, we have them running all the time. So if you want to use these same things, learn how to set them up properly and use them for yourself, you can check out the link below. This is not going to be like a plug and play, although we like to make it as much as we can easy for you. It's not something you can just plug, make $1 million from tomorrow. It's impossible. But it's something you can kind of build up over time, build a second stream of income that can make you, depending on your account balance over time, some good income. But something, if you're interested in this, Algos, kind of doing it more hands-off, we'll leave that link below for you guys to check it out. Any question will be available to help you out. And Alex is always helpful, always there to support you, always there to answer your questions. And look forward to catch up with you pretty soon, either in Hong Kong or somewhere else around.